LiteFinance, the world of financial freedom.
Hello, it's Monday, 8th of May, and it is time to start the market forecast for this upcoming week. So, in terms of a calendar, we shouldn't be disappointed. Today and Tuesday, nothing much will happen, but on Wednesday, we will get a CPI data from the US, which is the most important figure of the week. On Thursday, we will get the Bank of England rate decision, where most likely we will see a 25 basis point upward revision. Apart from this, OPEC will publish a monthly report, and another inflation gauge will be published from the US, which is PPI, an inflation on producers' side, which is a leading indicator which signals what can happen next to the consumer price inflation. On Friday, we will get the UK's preliminary GDP and manufacturing production. And so that would be it in terms of a calendar. Now let's discuss gold and what we might expect next in terms of a price of this commodity. So, well, if a recession doesn't help gold reach a new all-time high, either the banking crisis or the debt ceiling story will. After trading around the previous high, the precious metal rolled back as investors feared that a strong US jobs report for April would strengthen the US dollar and push up treasury yields. However, gold is due to continue its rally. The banking crisis is a much more powerful argument for buying gold than high inflation. The latter only reduces the value of your money, but due to the bankruptcies of credit institutions, you can lose your money at all. So in this regard, the three collapses of a bank over the past couple of months, each of which entered the top 5 in the history of the USA, rightly pushed the XAU-USD price to a new record high. Another reason for buying the precious metal was a PacWest's statement about the possibility of selling assets to secure its future. Bank stocks plummeted and gold soared up. The collapse of bank stocks can be viewed as a hysteria or a market's attempt to impose its will on Fed. Investors do not just expect they demand a dovish shift. The chances of a 25 basis point cut in the federal funds rate in June are estimated at 53% and in September at 89%. Another factor that could lead to catastrophic consequences and provoke a recession is the reluctance of Congress to raise the national debt ceiling. Already in early summer, the US may default because of this. Short-term bill yields went up, and the yield curve inverted as deeply as it hadn't done in 30 years. The problem was fueled by the meeting of the Fed and the ECB, as a result of which US and European bond yields went down amid expectations of a pause in the monetary policy tightening cycle in Washington and its imminent end in Frankfurt. Sensitive to the trend of treasury yields, gold naturally soared in value. Thus, the banking crisis, high risks of default and recession, as well as the loss of confidence in fiat money, increased the demand for the precious metal. In the first quarter, central banks bought 228 tons, the highest for the January to March period since records started in 2000, according to the WGC. The outflow of capital from the ETF was replaced in March by an inflow. Jewelry demand in China jumped to 198 tons, the highest since 2015. The 11th monthly capital outflow from ETFs was replaced by an inflow in March. So the current XAU-USD correction is because speculators exit longs if the US dollar will continue weakening against a basket of currencies. In this case, the gold price will continue rising to the targets at 2018 and 2130. I recommend buying gold on the corrections, and yep, that would be all from my side. Thank you guys for watching, and goodbye.